Good morning and hello again, everyone. Thanks for joining us here in Los Angeles for our monthly cargo operations media update. As usual, we have a lot of information to share today. Before we get started with our August volume and some of the forward-looking data, I'm pleased to announce that Jonathan Gold will be joining us to discuss global trade trends. As many of you know, Jonathan is the Vice President for Supply Chain and Customs Policy at the National Retail Federation, based in Washington, D.C. He is an authoritative and well-respected voice in our industry. Jonathan, thank you for taking the time to join us today. I look forward to our discussion in a few minutes. I'd like to start with a quick snapshot of business at the port today. As I've mentioned previously in this setting, our Los Angeles Port Police, led by Chief Tom Gazy, fly drones regularly for security purposes as well as a safety look at our 7,500 acres of property. It also gives us a good view of our terminals so we can track and improve fluidity of shipments moving through the Port of LA. As you can see, we still have room to grow here at America's Port as the American economy attempts to reemerge. Today, we have 15 vessels at berth, 12 container ships, 2 tankers, and 1 bulk vessel. Additionally, there are 17 ships at anchor in the San Pedro Bay. That includes 8 tankers, 4 bulk vessels, 2 container ships, 2 cruise liners in port for stores and gathering supplies, as well as 1 barge vessel. Terminals are fully operational, as they have been since the emergency orders were announced in early March, with labor shifts working on both the day and night sides. With the recent uptick in cargo volume, we're using drones, the Port Optimizer data, and daily conversations with our supply chain partners to identify and address issues. As I've been suggesting for the past several weeks, August was shaping up to be a strong month here in Los Angeles. Let's take a look at the numbers. During the month of August, the Port of Los Angeles processed a total of 961,833 20-foot equivalent units. 89 vessels called here at the Port of LA during the month of August, with only 1 canceled sailing. And to meet demand, 7 ad hoc or unscheduled sailings were put in place during August as well. This represents the best single month ever at the Port of LA, beating our October of 2018 number at more than 952,000 TEUs. This August represents a nearly 12% increase in volume versus August of 2019, and a month-on-month increase of a little more than 12% compared to our most recent July. The average exchange per vessel, how many containers we load and discharge, stood at 10,807 TEUs, which is another record. It breaks the previous milestone set back just last August of 2019, when we stood at a little more than 10,000 TEU moved on and off per ship call. As ships continue to get bigger, our work continues to be more efficient. This month was also the 5th time in our 114-year history that the Port of Los Angeles has exceeded 900,000 TEUs of throughput. August volume is more than double the cargo we moved just in March, when we dropped sharply with the onset of nationwide shutdowns. However, an important point. With this amount of volume, we also see complexity within the supply chain. We're working with stakeholders on the challenges that arise from one-way import surges like the one we're witnessing right now. We are listening closely, responding, and staying nimble to the needs of our customers and partners. The bottom line on August, we're seeing both replenishment of warehouse and distribution center inventories, along with retailers prepping for year-end holidays. The supply chain has been choppy for the last 2.5 years. While we built up some inventory during pre-tariff milestones, that has been predominantly worked down. Now we're restocking that inventory that goes all the way to the store shelves and our homes. With all of this, a word of caution. 1 month or even 1 quarter does not make a trend. Despite this import surge that we're seeing, the U.S. economy and global trade face significant challenges. Cargo volume remains down nearly 12% year on year through August. The trade imbalance has deepened, with American exports continuing to struggle. In my view, our economy remains in a very precarious position. Breaking down the August numbers into detail, we saw 516,000 TEUs on the import side of our business. This is the first time in our history that we've ever crossed the 500,000 mark on imports. However, those imports are still down year-to-date through August by almost 8%. Exports continue to wane, as I've shared, declining 21 of the past 22 months. We're seeing more of an imbalance, something we warned about in the early days of the trade tensions between the U.S. and China. These impacts hurt round-trip economics for our service providers and others. Although overall volume has increased month on month for only the first time in a year, we're still seeing a high number of empties being repositioned back to Asia to catch the next round of imports. This is also the pendulum effect I described in the early part of 2020 as to how we were going to balance import surges or mini surges with the empty requirements and the pre-positioning of that equipment in Asia to match up with the demand cycles. In totality, year-to-date through August, the Port of Los Angeles is tracking a little more than 11.5% behind 2019. You may recall at this very news conference in May, the Port of LA volume was down about 18.6% year on year. So we've cut a bit into that deficit over the past 3 months. For the San Pedro Bay in total, August saw volume grow by 10.6%, but we are still down year-to-date through August by 7 percentage points compared to 2019. And as always, and what I like to share is the correlation between cargo movement and jobs here at America's Port. For our most recent week, we saw more than 48,000 labor shifts here on our docks. That was the highest shift count since February of 2019. But we're still down 14% year on year, and compared to the all-important 3-year average that smooths some of the abnormalities that we've witnessed in the supply chain, we're also down 14%. But as you can see looking at this chart, for 5 consecutive weeks now, we've been at or above that important blue line, the 3-year running average, encouraging as it is. Looking forward, the Port of Los Angeles recently introduced the Signal, a tool powered by the Port Optimizer, co-created with the Wabtec company. It's designed for easy stakeholder access with forward-looking information to better plan and prepare for inbound cargo. This is a service of the Port of Los Angeles, and it offers a 3-week upstream look at cargo coming to LA. It helps make railroads, chassis providers, truckers, warehouse operators, and others more nimble and efficient. This is particularly helpful during surges like we're seeing now for the preparation of asset and labor planning. Information is available on our website so the operations folks can go into greater detail. And it's also pushed out weekly via social media. I'd suggest bookmarking this site at signal.portoptimizer.com, where data is updated every working day. As always at the Port of Los Angeles, under this and other digital programs, no proprietary data is shared. The Signal data also indicates that September volume in totality is looking strong. For my forward look, we're estimating about 900,000 TEUs for the month of September. If achieved, that would be the first time a U.S. port has reached 900,000 TEUs in consecutive months ever. The Signal data also delineates shipment size and mode of transport for local delivery, on-dock and off-dock rail, and where truckers need to move their assets and their talent. Additional granular data can be accessed on our website, and the preliminary Port Optimizer numbers indicate that October will be solid as well. Right now, I'm estimating we're going to be in the high 700,000 TEU range, and for comparison purposes, last October's volume was right at 770,000 TEUs. We'll continue to share more downline looks in future press conferences. With the fourth quarter still in play, you may remember that in May we were forecasting year 2020 volume at 7.9 million TEUs, which would equate to a 15% year-over-year decline. Today, I've revised that estimate to 8.5 million TEUs and a year-over-year decline of approximately 9%. The revised forecast takes into account a conservative view of quarter four. We'll continue to watch macroeconomic and public health data points very closely. I've shared a lot of information here today. Now I'd like to bring back Jonathan Gold of the National Retail Federation. Jonathan, what are you seeing in terms of cargo movement now here in September and downward into quarter four?
Hi, Gene. Thank you very much. And I think, we just released our global port tracker last week. So I think our numbers match up pretty well with yours. I think obviously August was an extremely strong month, as you noted. The recovery, it's not just planning for the holiday season, but also the restocking for all the products that have been going on over the past few months. But I think we're looking for the rest of the year to be just as strong. Hopefully, we'll see our downtick as we usually do, since we're now in the peak shipping season, so things might cool off as we get into October, November, December. But we think the next 6 months will certainly be increase over what we've seen over the prior 6 months. So that certainly sends a very strong signal. I think there's still a lot of uncertainty, though, looking towards the end of the fourth quarter and looking to early 2021, that I think retailers and others are trying to plan against the ongoing uncertainty of where we are, where we'll be with COVID recovery and things like that. So it's, as you noted, it's tough to plan against the uncertainty. But I think as we've seen with increasing consumer confidence, we've seen an increase in sales for holiday seasons that we haven't seen previously. So I think we are expecting positive outlook going forwards. But you have to look into your crystal ball and try and figure out how best to plan. But I think we're hoping for the best going forwards.
Now, one view of the experts from an economic side shows that we're not going to plays, we're not going to the movies or ball games, we're not purchasing services like our holiday or vacation travel. There seems to be more of our savings going towards purchasing at the retail level. Do your indicators show something similar to that, John?
Yeah, I think we've certainly seen that. Obviously, consumers have a little more disposable income now because they're not doing the traveling and going out and doing all the things that you've mentioned. Obviously there are still, high unemployment. Unfortunately, that's continuing to affect the United States. Congress needs to get back and do their work and pass another COVID-related relief bill to help with some of those unemployment benefits that have unfortunately stopped. But, I think we are seeing consumers, again, they've spent on some of the holidays that we've already seen. July 4th, Independence Day, we saw strong sales. Mother's Day, Father's Day. Back to school was a surprisingly a good season. Obviously, school is very different than what we had thought back to school shopping would be, as you're seeing more spending on consumer electronics and what you need for homeschooling. And again, we're looking, we haven't forecast the December holidays yet, but I think we're hoping that those trends will continue going forward.
And this is for recovery purposes that we're having this conversation, John. In our business, as you well point out on a number of occasions, the space on ships, trains, and trucks is all perishable. Once it's gone, it's gone. And as I forecasted here at the nation's largest port, I see volume at the end of the year coming in about 9% below 2019. So we're all taking a shorter term view of what this looks like. What does the order cycle process appear to be from the retailers, where we start seeing demand signals maybe 60, 90 days upstream from a vessel sailing in Asia?
Yeah, I think you're correct. I mean, usually the retailers are planning months ahead of time, 3, 6, 9 months. So obviously this is a very different scenario that we're in now as to where you traditionally would be. So, retailers aren't planning as far ahead, but I think they're giving those signals, again, as the consumer continues to show confidence and we start seeing those sales continue to increase. Retailers are trying to meet that demand. So they want to make sure they're ahead of the curve. They're still going to be cautious. They're not going to over order and put themselves in a position where if we do have a, shutdown again, that impacts retail sales, I think they want to be careful of that and mindful of that, but they are going to make sure they are meeting that consumer demand, which again continues to increase.
Right. Shift gears just a little bit, John. What are your members and you seeing on the ground right now operationally? I've stated what the numbers are here in Los Angeles, and we've seen some other upticks across the west coast of the United States and into British Columbia. But we've also seen the imbalance widen. We in Los Angeles now are at 5 imports for every 1 export container, where we had been at about 3 to 1 or 7 to 2. What are you seeing on the ground today?
Yeah, I think, it's these operational issues that are just always seem to happen. We get into these issues where you have a slowdown and then we get these upticks and surges, and then you run into the same issues of congestion that always seem to happen. So we continue to hear from our members ongoing issues with chassis, which have been a perennial issue, the ability to return your chassis, the ability to return empties. Hear a lot of concerns from members about the inability to do dual transactions, which we think certainly will help some of the efficiency issues that we're seeing at the port. NRF, along with a number of other groups, including the Harbor Truckering Association, we sent a letter to the ports of LA and Long Beach looking at the ability to help with the dual transactions and maybe focus on that. We think that, should be an easy win that we can get if all the stakeholders work together. Folks need to just come to the table and work through these issues. In today's world, in the environment we have with all the data, you highlighted the data through the Port Optimizer, everything you were able to collect. We need to now take that data and actually operationalize it and use it for forecasting and plan appropriately. So, we think the dual transactions is an easy win that we can get that would help some of the issues that we're seeing.
Great thought. And that working group that you mentioned, the ongoing dialogue that we who have worked very closely in this industry for some time continue, really spurred the Signals launch several weeks back. And it was a way of simply taking aggregated data and giving folks an upstream look so they could plan. We don't want folks coming back to us and saying they were caught by surprise by surges in any part of our supply chain service provider community. So it's a step. We know there's more work to do. And in the coming weeks, I believe we're going to have a solution introduced to the market on those empty returns so we can better coordinate and not have surprises on that end as well, while incenting behavior around dual transactions. I've long said here at the Port of Los Angeles that we have to help where we can make the economics work for our customers and partners alike. And you'll see more effort on that area with real money going to those who perform the best on the ground at the requirement of the retail community and other beneficial cargo owners.
Great. Thanks, Gene. We always appreciate the leadership that you've shown at the Port of Los Angeles on addressing some of these issues. I think you guys certainly have led the way, and we hope that other ports can take a look at what you've been able to achieve thus far. And I know from my members, they want to make sure that there's a strong partnership between how we're working with the port, but also make sure that the entire San Pedro Bay is working on these issues. So the Port of Long Beach as well needs to be brought into this and make sure they're working with us in strong partnership as well.
Thanks, John. And as always, I appreciate your candor and your forthright discussion. And for the folks that are viewing this is a typical conversation between John and folks in this business about how we can get better every day. We're not pulling punches. We're talking about reality on the ground, but as you can see, with the utmost professionalism as always. And now, we'll shift gears, Philip, for the Q&A section. Both Jonathan and I will be available for that to the media and journalists who have joined here this morning, Pacific time.
Thank you, Gene. A reminder to journalists who are on, you're welcome to type in the questions in the chat box or raise your hand. We have gotten a number of questions in advance. We'll start with one for Jonathan from Paul Avery of World Cargo News. He's asking about the impact of COVID on Halloween retail and cargo. He's observed that there seems to be less Halloween merchandise in the stores this year.
Sure. Thank you for the question. Obviously, Halloween is going to look very different this year, but consumers are still finding ways to mark the occasion. From some of the surveys we've done, over 148 million adults still plan to participate in Halloween-related activities. That is down from prior years, but folks are looking at more at-home activities. So while spending is down, we think those that are participating, their numbers will actually be spending up. Spending for last year was about $8.78 billion in 2019, but it'll drop down to about $8.05 billion. But the per person average is going to increase from about $6. So from $86.27 to just over $92. So, consumers still want to mark the occasion. It's just going to look a little bit different than what we've seen in the past.
Thank you, Jonathan. A question from Dan Ronan at Transport Topics. Apparently, the World Trade Organization just ruled in the last few minutes that President Trump's $400 billion in tariffs against China violate international trade. He's asking for reaction from both of you in light of the president's position on tariffs.
Yeah, we've covered this topic a number of times in many different settings. I lived in China, I worked on the ground, and I happened to work on the ground during the SARS epidemic, so I understand things maybe from a different perspective. While there is a need to fix certain aspects, that's why we call it rules-based trade. And we support the improvement economically, community-wise, of every American company that wants to get on the global stage of trade. We want to support growth for our workforce, both in job, skill, and pay. But at the same time, it's my belief that the two largest economies in the world need to work together under a rules-based system. And I think if we go into these discussions like that, we'll see improvement. At the Port of Los Angeles, some 55% of our business is trade to and from China. It's very important to us. It's equally as important to the 1 in 9 people who have jobs in Southern California related to this port complex, and the nearly 3 million people nationwide that also work based on cargo flows here. The most interesting statistic of all is that the cargo that traverses the Port of Los Angeles reaches each and every one of our nation's 435 congressional districts. This truly is a conversation of global significance when it comes to the U.S., and I hope we can proceed from here to find a way to get a trade deal accomplished.
Jonathan, any thoughts?
Yeah, I think from the outset we've always been opposed to the use of tariffs. We agree with the initial investigation that USTR did, looking at China's abuse of IP theft and forced technology transfer. We certainly agree China has been a bad actor, but we don't think tariffs were the right way to go to try and get China to make changes. Tariffs to date, the U.S. has collected over $58 billion in taxes from U.S. companies. Those are what the tariffs are. Their taxes have been paid by U.S. companies that have been hurt as a result of this. And it's not just the U.S. importers that have been hurt, but U.S. exporters, as Gene noted, because of the retaliatory tariffs have been placed on U.S. exports, both in ag and manufacturing. So we certainly have been concerned with the use of the tariffs from the outset. We're glad to see the WTO rule, and we think there are better ways to go about addressing the issues with China, where it's not just a go-it-alone approach. We think other countries, including the EU, Japan, Australia, and all of our trading partners, all of our allies, all share the same concerns. So we need to work in a coordinated effort to get China to change on these issues. We just can't go it alone and shoot ourselves in the foot with using these tariffs, which again are taxes on U.S. companies.
Thank you, Jonathan. 2 questions from Jeff Berman of Logistics Management, one for Gene and one for Jonathan. Gene, we'll start with you. Is August more a byproduct of peak season activity or more of a needed inventory rebuild due to COVID?
Thanks, Jeff. And I think we addressed that in some of the opening comments. It's a combination of both. We've seen, when I call it a choppy supply chain, because of the trade tensions and the tariffs, we saw an advance of a lot of import inventories over the past 2.5 years, leading up to full warehouses, high levels of products sitting in warehouses waiting to be distributed and consumed by us, the American public. So we're seeing some of that replenishment now. And as I also noted, in the month of March, compared to now, we've seen an increase in shipping because we've got to hit the mark on those inventories. And with us not going out really and buying service-related products, we've got a little bit more money to spend on internet sales, big box retailers, home improvement stores, etc. And to their credit, those folks and their supply chain leadership have got to keep the stock going and make sure that the shelves and fulfillment centers have the products that we need as American consumers. We're also seeing just a little bit of planning towards an uncertain year-end holiday season, but again, Jonathan mentioned earlier on that we're seeing some signs of improvement in that outlook, and we're going to be prepped for that as well.
Thank you, Gene. Following up on Jeff with Jonathan, is it reasonable to expect elevated import volumes to continue into Q1 of 2021 based on the need to rebuild inventories?
So our global port tracker, which again just came out, is forecasting that year-over-year declines from October through January, which is as far out as the forecast is going at this point. So we've seen imports have recovered. Again, as Gene noted, it's a combination of rebuilding and stocking up for the holidays, but it's unclear to say whether or not we're going to see sustained year-over-year growth beyond September. Again, there's I think just too much uncertainty in the market right now to figure out where things are. But we're certainly hoping that we'll see that rebound. But we all know that at the end of the year, the numbers tend to trail down anyway as we get towards the end of the year. But we'll just I hate to say it's a wait and see, but with the uncertainty, it's unclear right now.
Thank you. I think we'll combine questions from Eric Watkins of Lloyd's List and Stas Margaronis of the American Journal of Transportation. They're similar topics. Eric is asking about bottlenecks and if there are reports of those, and whether we're seeing shippers considering bypassing West Coast ports for all water destinations farther east. And Stas is asking about shippers for being some reports being forced to truck their containers because they can't find space on the UP and BNSF. And can the Port of LA help by encouraging BNSF and UP to increase rail capacity? Gene?
Yeah, Eric, Stas, thanks again for joining and appreciate your insightful questions. Couple of comments. Again, within the supply chain, we face challenges every day. Some that the general public and observers see, some that nobody does because we're working on each individual node so closely. But with respect to bottlenecks, as I outlined, not an excuse, just fact. We're seeing imports increase, exports wane, and a widening of the supply chain trade gap in pure container format, much less the dollar value that trade people in Washington have to worry about. But when we see this gap widen, it lessens the opportunity for round-trip economics, whether it's an asset provider like the rail or truck folks. What Jonathan said is also very key. How do we get these dual transactions so the truckers can bring an export load in or an empty while picking up an import simultaneously so they can get the best velocity from their assets? So we increase imports, and exports are going nowhere because we don't have a national export plan yet to help some of the 55 million Americans who have filed for unemployment get back on the job. So that is a problem. We are seeing truck turn times at our terminals inch up from where they were simply because there's more volume. And we may have been artificially low when that volume hit its ebb of only 450,000 TEUs just a couple of months back. The other piece to this that's very important as well is the use of supply chain data to prepare ourselves. We still hear folks, even with the advent of the port optimizer, saying we were caught off guard or we were surprised. So we're trying to force the data out there to people so they can have it, help coach them up on what can be best used, and how we can get more information sharing going within the supply chain community. Your other question is, so we're working to fix these all the time. Continuous improvement is our look at this. Is cargo moving from the West Coast to the East Coast? I think the numbers would debate that very closely, but we're not going to sit on our laurels. That's why I put that competitiveness team together that includes labor and many others to say, how are we going to answer that question of competitiveness operationally, cost-wise, and policy-wise? So we'll continue with the work in that area. We're fighting for every container we can because it means jobs here on the ground. And had we simply kept up with organic GDP growth in the nation over the past 2 decades, we'd have on average 200,000 more jobs per year on the ground related to this port. For Stas, I followed some of your writing on the rail, and again, you're seeing an imbalance, such a flood of imports, very few exports going back out, and it's a really difficult balancing act. It's a high wire act, really, for the Western railroads and our PHL here on the ground in Los Angeles to try to figure out how to move assets, engine power, and crew when we're so far out of whack because of this trade imbalance. Yes, there may be some outliers that are needing to use truck more often today, but I think the Western railroads, who we are working with very closely, on this competitiveness team take this extremely serious and are working closely with us to make sure that they find the efficiencies necessary while making sure customer satisfaction continues to rise.
Very good. Thank you. This is for both Jonathan and Jean from Paul Page of the Wall Street Journal. Jonathan, perhaps we'll start with you. Are the fires having any impact on inland distribution from the port and and connections via truck and rail?
Thanks, Paul. I mean, great question. To be honest, we're having a call with our folks this week, so I will know more after that. So, Paul, I'm happy to reach out to you again later this week after we talk to our members to see. But I know certainly folks are very concerned with the ongoing fires and impact that's going to have potentially on retail operations and on the ports and the movement of cargo. So, Paul, I'm happy to talk to you later in the week after I talk to some of my members and get you some additional information.
Yeah, from our vantage point here in Southern Cal, so far no impact, but we are watching so very closely. The mayor's weekly cabinet meeting we covered with Los Angeles Fire Department Chief Ralph Terrasas, the staffing power that we're putting out throughout the state of California, some of the analytics that we're using. We're also closely monitoring and participating in the Bobcat fire, which is in the Angeles Forest, and also the aforementioned Port Police Chief Tom Gazy dispatched some of our real skilled Los Angeles Port Police staff to work some drone and analytic surveillance around that Bobcat fire to see if we can predict not only weather but patterns of flow within this fire and how quickly we can get it under containment. The other fire out near Yucaipa off the 10 freeway is also something that we're monitoring closely, both officially as well as through the supply chain work, because as most of you know, about a third of our import cargo goes out on wheels to the Inland Empire, to the more than 1.8 billion square feet of warehousing and distribution space and the skilled workforce that's out there. And that brings me to the most important point, whether it be the good people that work here at the port, in the warehouses, or throughout the supply chain, their health and safety is job number one. I think we've done a very good job thus far around our COVID-19 response, whether it be with Logistics Victory Los Angeles, the outreach that we've done through the Los Angeles County Federation of Labor and other organized labor divisions, but also now with this smoke. We recently dispatched more than 75,000 European version N95 masks to the United Farm Workers of America, primarily doing their jobs in the Central Valley of California, helping not only feed America, but the world. So we'd like to say we're on top of this, but we keep scratching every day to work the best we can and make sure the health and safety of our workers is first and foremost in all of our minds around the supply chain community.
Thank you. From Lloyd's List, Eric Watkins for Jonathan. Regarding the resurgence of retail buying, you've cautioned about over-optimism, reading too much into the numbers, and urging consideration of continued uncertainties. What do you see as the uncertainties, and are they enough to negate what looks like the reemergence of consumer demand?
Sure. So, I mean, the economy is recovering, but our chief economist, Jack Kleinhans, has repeatedly said that the future of the economy really depends on the future of the pandemic, and the path of the virus right now continues to be the biggest uncertainty. It's just that ongoing unknown of what's going to happen in the fall. There's a lot of discussion of what happens when we hit the flu season and the intersection of the flu and COVID and what happens with that. So I think that remains the biggest uncertainty is where the pandemic and the virus is in the fall and what happens after that. So it's, you hate to say it's ongoing uncertainty, but I think, everybody is trying to plan as best they can without knowing what the future holds.
Thank you, Jonathan. From Bill Mongaluzzo of the Journal of Commerce, for Jean, I think, are you seeing any improvement on the operation side of the port, truck turn times, chassis availability, and ability of local warehouses to secure enough labor?
Yeah, Bill, that's what we strive for every day. And it's a moving target all the time. As I mentioned, continuous improvement is our objective here. And where we'll see spot bottlenecks and some things that we'd like to improve upon, there are certain abnormalities right now that we have to take into account. Please mind you, these are not excuses, but these from the supply chain view are the areas that we can focus on most quickly and try to improve. I think a couple things come to mind immediately. Our warehouse complex out in the IE, the Inland Empire, is also faced with staffing issues today. COVID-19 response, physical distancing, how many folks can go on the job at one time, how much work we have out there for these folks, and it's been an ebb and flow. Remember, going all the way down to 450,000 TEUs, it was the lowest throughput volume that we had seen since the Great Recession, more than 10 years ago. So getting that staffing right is now becoming a science with those logisticians, distribution centers, warehouses, omni-channel distribution networks. The other piece is that the chassis pool, the pool of pools here today, which represents about 65% of the haulage, balance 35 being trucker-owned and long-term lease chassis, is built and planned for a 4-day dwell time off port property, meaning as we deliver an import container to a warehouse, to a storefront, or to the customer's facility, we plan on that chassis being out of port for about 4 days. We're starting to see dwell times inch up, and we need to inject additional chassis to get that right-sized. We still have 18,000 chassis sitting on marine terminal operators' facilities today. I've long advocated to get those chassis off the marine terminals to a near-dock location with business rules that will allow for the success of the IEPs, as well as speed the velocity in a safe and sophisticated way for the containers moving in and out of the port. This is a call to action to renew the chassis model, and we said at the beginning it would be an iterative series of steps to go forward. We're now past where we need to be. Action is required today. But all in all, Bill, I'm fairly pleased with the operations, but we're humble. We want to improve every day, and where spot bottlenecks are pointed out by people like John Gold, Weston LeBar, or others who really have their eye on the ball here, we're going to respond, and we're going to respond swiftly.
Thank you. Costas Paris from the Wall Street Journal is directing this to Gene. A number of West Coast trade associations wrote a letter back in July to the California governor raising concerns about the loss of volume share at California ports. Why is this happening, and what is the Port of Los Angeles doing about it?
Well, this is probably, Costas, the most popular question on these press conferences. It's the third month in a row that a seasoned journalist has raised this. And I'll tell you the short answer. We put together a coalition of West Coast business interests back in the early part of the year to answer the question of competitiveness. We focused on 3 areas: the operations of the port, where we have to get it right every day; the finances of the port. It's been widely panned. To move a container through the Port of Los Angeles, it's 2 times the amount that it costs through a right-to-work port state in the southeast United States. And policy-wise, we've got to make sure we align ourselves with elected and appointed officials to create good public policy. We're not going to roll back on any environmental measures that we've worked so hard to instill, but also we want to be sharp as we go forward. And in this West Coast coalition is also the advice of people like Jonathan Gold, Peter Friedman, and others back in Washington that have very large memberships that use this port if we're doing things right. We've lost market share for more than 2 decades, 20% to be exact. And that cargo has gone to other ports in British Columbia, the East and Gulf Coast, who have hired switched-on people to run their facilities, aligned their legislatures with the business interests, and formed regional coalitions. One of the most startling statistics, Costas, is that over the last decade, federal monies that have been invested in East and Gulf Coast ports outnumber in value the West Coast ports 10 to 1. More than $10 billion of federal investment is taking place on the East and Gulf Coast over the last decade compared to $1.2 billion on the West Coast. We have got to better organize the western states to be able to form a coalition that drives that investment here if we're going to answer these questions. So believe me, this is the most serious and high-level topic we're focused on today, and we've brought together organized labor in the ILWU and 10 other organized labor divisions through our labor collaborative led by Aveen Sharma. We've also got the Employers Association, as I mentioned, the 5 West Coast container ports, and for the first time with that coalition, the 2 Western railroads. How do we find efficiencies? How do we have better margin plays so we have the logistics experts using our gateway as the gateway of choice? Much more work to do, but I think the postulate that we put in place and the framework is going to get us started on conversations that some didn't want to have in the past because they were too painful. Now we've got open and honest dialogue happening on the ground, and with great advice of people like John who represent a large membership base.
Thank you, Gene. That concludes the question, so I'll let you finish with Jonathan and then make some concluding remarks.
Great. And again, Jonathan, you've been our first guest on our monthly press conference. Insightful as always. And we appreciate your partnership because you're trying to get work done here with us. And as difficult as it is to bring all of these different cargo and service interests together, you continue to be a constant. We appreciate that very much.
Thank you, Gene. Appreciate the opportunity and always appreciate your leadership on working through these issues and look forward to continuing our work together.
Will do. Thank you again. In closing, I'm encouraged by the volume that we're moving here at the Port of Los Angeles today, but there is also reason for caution and concern. By no means are we out of the woods as a nation economically. We're facing severe economic contraction. We're in the midst of a national health crisis like we've never seen, and trade tensions continue. We should be careful not to measure economic and market strength in monthly snapshots. We need to look at multiple quarters for a more holistic view, and that's what the economists tell us as well. Here at the Port of Los Angeles, we're doing everything we can to support our nation's economic reemergence. I'm grateful for your interest as always, and will continue to keep you posted on future developments here at the Port of LA. Until next time, thank you and stay safe.